and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped at the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
disclose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl?
Superwoman. I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, wear the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone.
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What if everyone it's a girl, Superwoman?
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Microsoft or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube, it is Monday, December 14, 2020. Carol Masser along with Tim Stenovic, host of Bloomberg Quick Take. And man, here we go again.
Yeah.
Right?
Potentially.
Potentially, and that's a good caveat. But New York City's mayor warning that we could, see about a full possible shutdown of the city once again. At the same time, you've got the first vaccine shots going out, and then you've got the election, like one big step closer to it being done.
Yeah, I mean, hopefully done sooner than later.
Right.
I don't anticipate this will change anything with President Trump acknowledging his defeat.
Correct.
But what's supposed to play out per the Constitution is playing out.
I think for investors, it's just like one of those things we cross off the list. And of course, we're talking about the Electoral College.
That's very true.
So we got lots to get through over the next few hours. Let's get you going, though, with a check on that trading day, because we're just off our lows. Hey, Charlie Pellet.
Well, hello there. Happy Monday to you both. And we are looking at little change right now in the S&P 500 index, giving up earlier gains. And a few moments ago, we did see the S&P 500 index just turning negative. The Dow now back on the plus side, up 3 points. Little change there. S&P up 6, higher by 0.2%. NASDAQ surging 123 points. NASDAQ up another 1%. The advance, though, faltering. Equities near records as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. We've got the 10-year yield at 0.89%. Gold is down 0.7%, lower by $12 the ounce at $18.27. And West Texas Intermediate crude Crude up now by 0.4%, $46.77 a barrel. Airbnb and DoorDash are falling after a pair of Wall Street analysts warned that first-day trading surges last week leave their valuations at precarious levels. DoorDash shares lower by 11%, Airbnb down now by 6.7%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We got a lot going on. Carol Massar along with Tim Stenovic. So let's get right to the Business Week agenda because we do want to see what Gina Martin-Adams has to say about kind of the market environment before we get into a lot of our interviews. She is Chief Equity Strategist at Bloomberg Intelligence. She's on the phone in New Jersey. Also in New Jersey on the remote access is Dave Wilson, stocks editor at Bloomberg News. So Gina, here we are. There is a lot of stuff going on, and I feel like the economy, again, we're seeing shutdowns. At the same time, we're seeing those first vaccine shots being administered. I do feel like, it's again that, a step forward, a step back, it just feels like.
Yeah, it does, and I think that's reflected in the market. We've got a real story of rotation today more than anything. The market's pretty flat, but we've started to see a little bit of rotation back toward the stay-at-home plays in the index, which I think does reflect that notion of we are likely to see further shutdowns. We are likely to see potentially some pressure on fourth quarter and first quarter earnings emerge as a result of those shutdowns. And so there's a bit of flight to defensiveness, so to speak, going on in the market.
Right.
That said, it's hard to read too much into it because the value trade, cyclical trade, went so far over the course of November and early December that maybe some of this is just a little bit of give back of really exuberant conditions that emerged post-election.
But we're also seeing, not that big of a pullback right now. Only the Dow is lower if we look at the major indices. Why do you think investors aren't reacting more to the idea of a bigger shutdown in New York?
Yeah. Well, I think the reason they're not reacting as much as, past shutdown news has created reactions is partly because we're used to it to some degree, partly because we were anticipating a rough winter. People have been writing about a dark winter coming since last summer.
Yeah, exactly.
So we kind of knew that it was going to get a little bit nasty in the winter. Nobody knew the extent to which it would get nasty. But then the big offset is, of course, inevitably we are now inoculating our population. We are actually seeing vaccine distribution earlier than many had anticipated.
Right, we didn't have that
so
last spring.
Can look through that.
Right.
Exactly. We didn't have it last spring. We didn't have it this summer. Even when, Pfizer first announced the results of their trials back in November, it came as a shock. And still even then, I heard a lot of people saying, yeah, but we're not going to get this vaccine until the summer at the earliest.
Right.
So it does appear to be moving a little bit better than anybody had anticipated, and I think that's providing the offset.
Dave Wilson, come on in on what you're seeing, because I'm looking at the major industry groups in the S&P 500. Only two are higher: consumer discretionary and information technology.
And what's the common thread? Big tech.
Yeah.
And technology, certainly, with Apple and Microsoft, and consumer discretionary, that sort of catch-all category. And there's Amazon.com up 2% at the moment, helping to kind of lift that index. And then if you look at the other side of the coin, it's really consistent with what Gina's saying. So the more value-oriented areas of the market are suffering a bit, especially energy stocks, by far the worst performers of the day among the 11 main industry groups in the S&P 500. The S&P 500 energy index down 2.7% as we speak. So giving back, just some of the gains that they've managed to post in the past few weeks as you had this kind of wholesale shift away from big tech and off toward more value-oriented areas of the market.
Are investors still optimistic that there will be some sort of stimulus package by the end of the year?
That's a good question. The optimism.
Tell us the future,
really,
Dave.
Yeah, the optimism you can really see in sort of the market forecast going into next year. All the strategists that I've looked at, or certainly others have looked at, they're predicting gains, and it's just a question of how much of a gain. So it's not like things are so kind of doubtful at this point that they're not willing to go out on that limb. And you're seeing some forecasts suggesting stocks will be up as much as 20% if you look at the S&P 500, which is not shabby.
Hey, Gina, Fed meeting, last of the year. What do we need to know just quickly about that? Because I know you're watching on it.
Yeah, we are watching it. It's sort of exactly.
We're watching on it.
It is one of many things, obviously, that everybody is considering. I think we're looking for consistency. I think there is sort of a little bit of a hope that the Fed might be able to offset some of the pressure on fiscal policymakers with even more expansion of the balance sheet than they had anticipated. But I think we're looking for just consistency in the Fed holding the line and continuing to remain accommodative. They're on pace to increase the balance sheet a good 20% next year, which would support the market continuing to move higher as it is. And that's probably enough, but if they give us a little bit of incremental holiday surprise, I don't think anybody would complain.
I think Jay Powell's going to dust off his cape again because he keeps saving us. We've got a great story that's in the magazine this week that's kind of about that.
I'm excited for that one a little later.
Yeah, right? So we're going to talk about that in a moment. Gina, thank you so much. Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. Dave Wilson at Stocks Editor at Bloomberg News. He'll be back with his chart and stock of the day. No, I am too excited about that because we're looking at what Jay Powell has done, and the story in the magazine, right, Tim, is just like likening him to Paul Volcker and what he did, Tall Paul, and someone that Jay Powell admired. But if you think about how he's really just charted his course and just done it.
The big question is there going to be a rule, right? The Powell rule, like there is with the Volcker rule.
Yeah, right? Exactly. That will kind of last.
Yeah. But I think his legacy is clear at this point, and his term's not even done.
Well, and I think it's just pretty remarkable how quickly he reacted, right? Kind of ahead of it. And it's interesting. They talk about a meeting he was in over in Asia and just was hearing about the pandemic and knew he had to come home and think about, okay, let's make sure at least the financial system is secure and we don't see any panic there.
Yeah. And look, early on, clearly it worked.
Yeah, exactly, right? So we'll get into that. We're going to get to a little bit later on. We're going to talk about virus logistics and distribution because that's where we are right now, right? Now we know the vaccines are being administered, but it's all about getting them out to everybody. We've got the Chief Medical Officer and Chief Supply Chain Officer at Advent Health, so we'll talk to them. David Rubenstein is going to be with us, co-founder, co-executive chairman of the Carlyle Group, also host of peer-to-peer conversations on Bloomberg. He's got a book out, How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers. I've had some time to talk to him in the past a little bit about this. I mean, the leaders he talks to.
I was just going to say that. Everybody.
Yeah, exactly. Yeah. From Oprah to Jack Nicklaus.
Maybe both.
No, the golfer. But it's just interesting to see about possible common threat. And I love those deep dive conversations, right? So we'll get into that. Ket Swig over at Swig Equities is back with us. We're going to talk real estate. We're also going to talk about what we are all doing while we're at home, working from home. We've got Jared Spataro. He's over at Microsoft 365. So we'll talk to him as well because he's got some great statistics. Quickly, just want to do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number, nice and round, $39 billion. AstraZeneca agreeing to buy Boston-based Alexion Pharmaceuticals for $39 billion, a cash and stock deal. Very interesting because we know AstraZeneca, also part of that race for a vaccine, but they're also thinking about, okay, what do we do after the vaccine?
A little further behind than the mRNA folks.
Yeah, exactly. All right, let's get a check on world and national news. For that, it's over to Ann Cates in D.C. Hi, Ann.
Hi, thank you. The largest vaccination campaign in U.S. history is underway, with health workers getting the first shots. Relieved as a reaction of a nurse who got vaccinated early today. The injections begin an effort to try to beat back the coronavirus as the nation's death toll nears a staggering 300,000. President-elect Joe Biden's advisors say he is entering the White House with a clear mandate from the American people. Bloomberg's Amy Morris reports from Washington, D.C.
Biden's team is confident the president-elect will be able to turn the page and follow through on his campaign pledge to unify the country and keep other promises, starting with providing economic relief and fighting COVID-19. Mike Donilon, who will be a senior White House advisor in the Biden administration, says there's a strong need to bring the country together and that it is in the best interests of the country for congressional Republicans and the Biden White House to work together. In Washington, I'm Amy Morris, Bloomberg Radio.
Members of the Electoral College are meeting today in all 50 states and the District of Columbia to make President-elect Joe Biden's victory official. The normally routine process is in the spotlight this election year because of President Trump's refusal to concede and his remarks that the voting process was rigged. Congress will officially count the Electoral College votes and declare the winner on January 6th. Early in-person voting began today in Georgia for the state's twin U.S. Senate runoffs. A majority of votes before the November general election were cast in person during early voting. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And certainly, I think this was the most read story on the Bloomberg, Tim. And it was about New York City possibly preparing for a full shutdown. At least this is according to New York City Mayor Bill de Blasio. The governor's saying we should prepare for the possibility for a full shutdown. I agree with that. We need to recognize that that may be coming, and we need to get ready for that. Now, I have to say, Friday going home from the city, I was floored. I was in a car, and even the driver was like, look at all the people on the streets. Fifth Avenue was busy, around Rock Center to be understood, Times Square. But I think it's going to be very different over the next few weeks.
I think it is too, but I wonder to what extent people will sort of pay attention to the idea of a shutdown, given we were essentially shut down in March and April and continuing. And this feels a lot different, even though the numbers that we're seeing are similar. I don't know if it's virus fatigue.
What do you think it is? Is it?
I think it has something to do with virus fatigue. I also think that we understand more about the virus, so we are okay with doing things back in March and April that we weren't okay with doing. I'll think about, I talked about going to the playground, right? Those playgrounds were closed, but, we've come to determine that they're not actually dangerous places to be, especially if you're outside. So I don't think we'll see the change in behavior that we saw in March and April if there is another shutdown.
I think you're absolutely right. I think about the first time, I didn't go to a supermarket for such a long time. And then the first time I walked into one, it was just like a little bit traumatic. And I'm now, okay, listen, they're being careful. I'm being careful. There's protocols in place. I think you're absolutely right that we now know kind of what we can do safely and how to do it safely.
But the big question is are people going to be working from home who haven't been working from home? Because that's essentially what the governor and mayor are saying. Take the steps now to be prepared to work from home.
I was just listening to Governor Andrew Cuomo, and he was saying, I guess his daughters were asking him, like, I want to go over somebody's house. It's just going to be a small group. And he's like, no, that's the whole idea. Like in the summer when we wanted you outside, not inside, now we don't really want you inside, or we don't want you inviting other people in.
Yeah, have you guys not been paying attention to...
Exactly.
Come on, I'm screaming it every day.
Especially him, right? All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and you are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tech shares are climbing, the broader advance in U.S. stocks faltering, equities trading near records as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. S&P 500 index clinging now to a 1-point gain, up less than 0.1%. Dow Industrials down 29 points, a drop there of 0.1%. At the best level of the day, the Dow had been up 279, up 0.9%. Nasdaq up 113, up 0.9%. 10-year yield 0.89%. Gold is down 0.6%, $18.28 the ounce. And West Texas Intermediate crude up 0.3%, $46.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. You're listening to Bloomberg Business Week. It is Monday. I'm Carol Massar with Tim Stanovic of Bloomberg Quick Take. And I'm guessing you guys talked a lot about the virus and the rollout of the vaccine finally here in the U.S.
Yeah, I mean, this is the story of the day, despite the fact that I think a lot of people listening right now won't be able to get it for months.
Right.
This is the story because this is now finally happening. And it's not just Pfizer-BioNTech, right? It's also Moderna's vaccine, which could be approved in just a very short time.
Right. And as everybody has said, we're going to need these multiple vaccines and their manufacturing to really kind of get it out to everybody. Let's get into it and let's talk about it because distribution, logistics, this is kind of where we are when it comes to dealing with the virus. Let's bring in our guest. With us is Marisa Farabaugh. She's Senior Vice President and Chief Supply Chain Officer at Advent Health. That's a faith-based nonprofit healthcare system based in Florida. They operate, though, across multiple states. And this on a day where global cases from the virus exceed 72.2 million and deaths are surpassing 1.6 million. Wow. Yeah, exactly. Whenever I hear those numbers. Marisa, nice to have you here with us. First of all, how are you doing? How's your team doing?
Hi, Carol. Hi, Tim. Thanks for having me on the show today. We're hanging in there. I mean, we're doing great. We're really getting excited about this vaccine. There's been a lot of planning, a lot of preparation that's gone into this time. So this is a big week. We're very excited for it.
So are you giving vaccines at the hospital yet?
We're expecting the vaccines to arrive on our campuses tomorrow, and then we'll be administering them shortly thereafter.
And I want to bring in also with us is Dr. Brent Box. He's Senior Vice President and Chief Medical Officer at Advent Health. He also is joining us, like Marisa, on the phone from Florida. So, Brent, I mean, listen, this is the day we've all been thinking about. How did you, how are you approaching in terms of the distribution, the rollout, making sure that everybody's going to get that second dose? Tell me about kind of the logistical planning you must be, the two of you, in the middle of right now.
So, hi, Carol. I'm glad to join you this afternoon. Yes, this is it's an exciting week because this is work that's been several months in the planning, and the team has been putting together a playbook for about 2.5 months, and the playbook is beginning to be executed this week and really starting over the weekend. So we're excited to get started.
The playbook that you guys put in place, I love that you use that word because I've been saying over the last few months, I mean, right, Tim, like nobody had the playbook for the virus, but you guys in the medical community, ultimately, they've got to come up with something.
They have this is what you go to school for.
Exactly. So I'm curious, Dr. Box, in terms of the things that you guys have been working on and anticipating and putting in place, is it kind of playing out like you anticipated?
It really is. There's a lot of fluidity to what we learn every day. But we had a group of about 50 of our experts and leaders across the system work hard on this over the last couple of months. And we were able to really track with the federal, the CDC, the FDA, the guidance that was out there to put together a playbook that will really make sense in the safe administration of this vaccine.
So, Dr. Box, how are you deciding who's going to get the vaccine in these early stages?
So we're following, Tim, we're following state and federal guidelines. We're really following it to the T. It's basically based on the National Academy of Medicine phased approach, which is in line with the CDC approach. So we're really focusing on those healthcare workers, our team members who are taking care of COVID patients every day. the healthcare workers with the highest risk of being exposed to the virus.
Which makes sense, right? We've been hearing from a lot. Marissa, come on in on this. So logistically, Tim and I have had a lot of conversations about these are viruses that have to be kept at incredibly cold temperatures. And I think they can, without that, they only last for a very short period of time. So what's been involved logistically in you getting prepared for receiving the vaccine and making sure they're kept in a safe place? Talk to us a little bit about that.
Sure. Well, as Dr. Box mentioned, we started our planning many months ago, and really at that time really thought about, okay, how are we going to store vaccines? Where are they going to get stored? Are they going to get stored everywhere? And where we landed was really a hub and spoke model. We did secure some additional ultra low freezers so that we could increase capacity at our hub sites. But a lot of planning, a lot of preparation, backup plans have gone into place as well. So really proud of the team for really coming together
And forgive me, I'm going to jump in because, I know our audience, I know Tim and I, we love the nitty gritty of the details. What else? Like you said, backup plans. What have you had to kind of think about to make sure you've got a backup plan for? Is it the refrigeration? Is it other things?
Yeah, that's a great point. As we think about the need for that ultra cold storage, even just dry ice machines, how do you manage dry ice and how do you get trained on that? So really, again, you just mentioned some of those details and the team spent a lot of time really incorporating that and making sure all aspects of this, have really been thought through well and are outlined in the playbook that Dr. Box just mentioned.
So take us through visually what this looks like. Is this a room that will be dedicated for the next few months with a line of people outside just walking in one after the other getting shots here?
No. So the room where we're storing product is going to be in a very different place than where we're administering the vaccines. And so, our storage is in highly secured spaces and where we can properly store and keep the refrigeration and freezing needs there. And then our pods and our administration will be occurring at very specific sites with, again, very practiced protocols in place and really being able to have our employees and have our team members and others come to those spaces.
Hang on for a second. We're going to continue this conversation. I love knowing the specifics. It's like getting us mentally ready, just like we had to get mentally ready for the test.
I'm ready for a vaccine.
I know you are. You've been ready months ago. We're going to get back to Dr. Box and Marissa Faribault.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic of Bloomberg Quick Take. We're talking about a vaccine rollout and really getting some insight into what it looks like within hospital systems and healthcare facilities.
I mean, this is the day. This is the day we're going to remember, Carol, even though a lot of us are not going to get it until, 2021, midway through 2021, perhaps.
Yeah.
This is the day where we're getting the vaccine.
Yeah, it gives me some optimism to start seeing people here in the U.S., right, getting the vaccine. All right, we're going to get back to our guests in just a moment. Let's get back, though, to Charlie Pellet, another check on that trading day. Hey, Charlie.
Thank you very much. Mixed Monday right now with S&P just turning negative. Little change, but lower by half a point here, so S&P in the red. The Dow is down 43 points, down by 0.1%, giving up an earlier 279-point gain. NASDAQ is up 109, higher by 0.9%. Off-session highs on NASDAQ have been up as many as 165, up 1.3%. But again, to be clear, NASDAQ up now by 0.9%. 10-year up 230 seconds, 10-year yield 0.88%. Gold on the minus side, down $11 the ounce, lower by 0.6% at $18.28. West Texas Intermediate crude up 0.8%, $46.97 a barrel. Tech shares are climbing. The broader advance, though, in stocks faltering, equities holding near records as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. Coronavirus vaccinations have begun in New York. A nurse at Long Island Jewish Medical Center in Queens got what Governor Cuomo called the first shot given in the state's campaign to vaccinate frontline healthcare workers. Elsewhere around the country, those trucks are rolling, cargo jets are flying as hospitals await their deliveries. Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
Sounds like any day now they'll start vaccinating in hospitals in the United States, which is a great step forward. And then we'll get more and more vaccine. We'll see nursing home residents vaccinated. And then the real challenges start because hospitals and nursing homes, it's pretty easy to find the people there. But once you get out into community settings, even if we're talking about very high-risk people, it's a much bigger challenge.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A German study confirms findings of a good safety profile and robust induction of antibody responses for the Pfizer-BioNTech vaccine. Pfizer shares, they're trading lower right now, down by 4%. BioNTech is down 8.2%. AstraZeneca, talking about the ADRs, they are tumbling now by 7.5%. AstraZeneca slumping after agreeing to buy Alexion Pharmaceuticals. Alexion is based in Boston. Its shares surging by 30%. And among some of the other key vaccine names today, Moderna, it is down by 0.8%. Recapping, stocks mixed. S&P lower now by 3, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest, Carol Massar, along with Tim Stanovic of Bloomberg Quick Take. And still with us is Dr. Brent Bach, Senior VP, Chief Medical Officer at Advent Health. Also still with us, Marisa Farah, Chief Supply Officer at Advent Health, also Senior VP there. They are a faith-based nonprofit healthcare system based in Florida, and they operate across multiple states here in the United States, both of them joining us on the phone from Florida. So, Dr. Bach, wondering how long you think it will ultimately take to vaccinate your staff and those frontline healthcare workers. What's the timeline you're anticipating? And when do you start to anticipate the vaccine actually going out to the general public, those most vulnerable first?
Okay, let me first answer the first question. I think that, we are set up and we have planned to vaccinate our team members as fast as the vaccine comes to us. We have some very large systems here in Florida, and for example, we'll be vaccinating at 2 administration pods here in Orlando at 1,000 team members per day, so that we anticipate getting that vaccine out to our team members as quickly as it comes. It's not clear how fast the vaccine will come to the community, but we look forward to participating in that, and we'll be prepared as a health system to help our communities in every place that we operate.
Dr. Box, how are the communities where your hospitals are? What are the numbers that you're seeing? What is the hospital capacity like in these places?
You know, it really varies across our system because it's occurring at different rates in different states. But our communities obviously are stressed, just like our facilities are. But in general, our facilities are doing well. They have really stretched to accommodate the needs of the volume of patients that COVID has presented to us. So our team members are really doing great work, and our hospitals are really standing in there for our communities.
Dr. Box, is it like what it was back in the kind of the high points or peaks for Florida?
You know, our peak was in the midsummer.
Right.
We are definitely seeing a slow rise here in Florida right now. So we're not seeing the same volume here in Florida that we did in the midsummer, but we're prepared for it if it comes.
Marissa, I want to bring you back in here and get more on the logistics and planning for the vaccine rollout at your hospitals. How are you planning for different vaccines that need to be stored differently? We know the Pfizer vaccine has to be stored at a very low temperature, but that's not the story for other vaccines that could potentially be coming in the next few months.
Yeah, that's a great question, Tim. And certainly, this has just been such an amazing feat, across many different areas to come together and be able to manage this complex, very rapid. But for us, it really is translating to being able to manage through a single system. And so we're using our single system regardless of the way that it's being stored. So regardless of it, whether it's in an ultra-low freezer or whether it's in a refrigerator, it's all making its way into a system. So we can account for it that way. We can look at our data analytics that way. And that's really, that really helps guide our future decisions in this space.
Dr. Box, last question, just got about 35 seconds here. Do you anticipate, end of summer that we are back to kind of a more normal way of life? What are you telling your teams at this point? And just quickly, if you could.
We're telling our teams a couple of things. Number one, we're strongly encouraged the vaccine. And number two, we're strongly encouraging our team members and our communities to continue doing what makes sense. PPE, wearing masks, social distancing, avoiding large gatherings, all those things that we know that really make a difference while the time goes by and the vaccine becomes more and more prevalent in our population. So those are the two things that we're focusing on, and we are very hopeful that those two together will bring us to that place in the summer you mentioned.
Fingers crossed. Good luck with everything. We know it's a huge task for everyone involved in this process. Dr. Brent Box, Senior Vice President, Chief Medical Officer at Advent Health. Also, Marisa Faribash, she's Senior Vice President, Chief Supply Chain Officer at Advent Health as well. Both of them joining us on Florida. It's a massive task.
It is a massive task. And there's sort of no, they talked about the playbook that they developed, but there's no playbook to actually look at from when this has happened in the past that they can do.
Exactly. So they're kind of, finding their way through it. And as they said, they've been working on it for a few months now. All right, let's get back to world and national news. For that, let's get back to Ann Cates in the Bloomberg 99.1 newsroom in the nation's capital. Hi, Ann.
Hi, thanks. Good afternoon. The first COVID-19 shots, as you've said, have been administered by U.S. hospitals today. The initial step in a historic drive to immunize millions of people this week as the Pfizer vaccine is distributed nationwide. Close to 300,000 Americans have died, and 200,000 are testing positive for the virus every day. The government plans to distribute 2.9 million doses during the week ahead, with the Centers for Disease Control recommending that the first shots go to healthcare workers and those in long-term care facilities. Lawmakers risk a government shutdown at the end of this week if they can't find agreement on an omnibus spending bill. Bloomberg's Amy Morris reports from Washington, D.C.
They got a stopgap measure to provide them with a few more days to hammer out the budget. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin continue to hold discussions as this Friday's deadline ticks closer. How to pay for veterans' health is just one big sticking point. Now, if they can't come to an agreement by this week's deadline, lawmakers can put together another short-term measure to avoid a shutdown, even as some senators say they should not adjourn until the work is done. In Washington, I'm Amy Morris, Bloomberg Radio.
Electors are gathering in 50 states and the District of Columbia today to formally vote for the next president and certify the victory of President-elect Joe Biden. The results will be sent to Washington and tallied in a January 6th joint session of Congress. The process has drawn more attention than usual this year because President Trump has refused to concede and continues to make unsupported allegations of fraud. Early voting is underway in Georgia for its U.S. Senate runoffs on January 5th. Experts at Emory University predict overall turnout could hit 4 million voters. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Ann Cates. This is Bloomberg.
All right, you're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic of Bloomberg Quick Take. You know, I was doing research for something and ended up coming across how Americans don't move around in the country anymore. And it used to be you'd move for a job and there was a lot of movement around. We don't and haven't for decades.
Until now.
Until now, right?
Yeah.
Thank you, COVID-19.
Right. It's what we're seeing, and it's one of the most read articles on the terminal today. Americans are leaving places like New York, California, and going to cheaper states. It's a story by Missy Gafopoulou, and it talks about not just Elon Musk and Joe Rogan and millionaires and billionaires moving, but normal people as well, as they realize they can work from anywhere.
It's so interesting. It says Austin gained the most people between April and October this year, followed by Phoenix, Nashville, and Tampa. This is according to data on 47 metro areas analyzed by LinkedIn. At the same time, the San Francisco Bay Area and New York City lost people.
Okay, so do you think this is here to stay, or is this a
Well, you and I
temporary
talked
thing?
about this. Like, I don't think everybody's just going to leave New York City, and I still think this is where companies want to be. This is where people want to be. It's where, forgive me, but there's a lot of art and culture and things happening.
And the problem is that hasn't been happening for the last 8 months.
Correct.
And people, I think, forget about, or not even forget, but what makes New York hasn't been happening. And that can mean living in a small apartment loses some of its appeal.
Right, exactly. And especially for people who maybe have kids who are thinking, okay, I'm going to move out in a couple years anyway because of schooling. Maybe I can go somewhere else. They talk about, I think, a couple that were thinking about moving, and they're just like, I can't go to my favorite restaurant. I can't do anything that I used to do. Why don't I just move now?
Yeah, well, you know what?
You're smiling.
It makes me
Why?
sad because I'm a Californian and a New Yorker. And, you know, even late Friday, we got news that Oracle is moving their headquarters to Austin.
Yeah.
And
Elon Musk.
Yeah, just the latest.
Joe Rogan.
The question is this going to be permanent, or is this sort of short-lived during COVID?
And I think it's going to be contingent on working from home, how long that lasts, and where companies end up setting up shop.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just about the worst level of the day now for the Dow Jones Industrial Average, down 51 points, down 0.2%. Best level, the Dow had been up 279, up 0.9%. Tech shares are rallying. The S&P on the minus side. We've got NASDAQ up 98, up 0.8%. NASDAQ 100 index up now by 1%. Technology shares are climbing, but the broader advance in the stock market is faltering as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. 10-year up 3/32, 10-year yield 0.88%. We've got gold down 0.7%, $18.26 the ounce, and crude West Texas Intermediate up 0.8%, $46.92 a barrel. Airbnb and DoorDash both lower after a pair of Wall Street analysts warned that their first-day trading surges last week left valuations at precarious levels. Shares of Airbnb, they're down now by 7.6%. DoorDash is slumping 9.2%. Recapping stocks mix, the Dow, the S&P lower, NASDAQ higher, S&P down 2, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic of Bloomberg Quick Take. So we've got a Fed meeting this week, last of the year, that's happening on Wednesday, and what a year it was.
Yeah, Jerome Powell, breakout star of the year, right?
Totally. I mean, really stepping up quickly. And that's exactly what Rich Miller gets into in a story currently in the magazine. He's economics reporter at Bloomberg News on the phone from the nation's capital, along with Joel Weber, editor of Bloomberg Business Week, on the remote access from Brooklyn. I was teasing it earlier, Joel, and I said, Jay Powell's got to get his cape out again in this Wednesday meeting. I mean, he has really just been unbelievable, certainly dealing with the pandemic.
You mean Clark Kent? Yeah, totally.
Exactly.
Remember, he's the one that just looks like a civilian. So yeah, I think when we talked about just people who have had extraordinary impact on the year, I think Jay Powell is right at the top of that list. And yeah, we could have certainly had some Superman-themed art to go with this story. But I think the other thing that Rich did a really good job of pointing out in this story is that it's not only just in the context of this year, it's actually sort of in the context of Fed chairs as a whole. Like if you look at that pantheon, Powell, if this was the end of his term, he would be right at the top of that pantheon with people like Paul Volcker. And the Volcker thing is exactly where I'll hand the mic over to Rich and say, talk to us more about the Volcker wrinkle of the story in your reporting, because Volcker's obviously been a person that has also been talked about in that pantheon context.
Yeah, and I mean it is kind of amazing that Powell has had a relationship in some sense with Volcker since the early 1990s. I mean, Volcker obviously passed away a year ago, but Powell was he sort of recounted. He was a middle-ranking Treasury official, and he says, here's a guy who's now rules the roost at the Fed, saying, I was frightened of even meeting this guy. You got so this 6'7", cigar-chumping, imposing policymaker who tamed inflation. But now Powell, he's not 6'7", he's like 5'10", but he's in his own way. He's made his mark. What do they say? A crisis makes a man or woman, right? And he rose to the occasion. But it's not only that; he's also turned monetary policy up on its head. Volcker sort of pushed unemployment up to like over 10% to bring down inflation, but now Powell wants to push unemployment down maybe to 3.5% or below to try to bring up inflation. It's like jujitsu type thing. But
what is the legacy of Chair Powell at this point? I mean, I don't think it's too early to start talking about it, but I mean, how will he be remembered for how he changed the Fed?
Well, I mean, I think one, in the crisis, he took the playbook that Ben Bernanke, the former Fed chair, had during the financial crisis, and he sort of, as we say in the piece, did it on steroids. So he pushed the Fed into lending to areas where they had never gone before. the Main Street business facility hasn't been as successful as they hoped, but they've done some lending there. They bought up, high yield bonds. They've bought up high yield bonds. They pushed, the envelope on the risks they were willing to take. And he also, Fed chairman have been basically since the 50s when the sort of Fed broke away from the Treasury. The Fed basically used to provide finance for the Treasury. Just effectively, the Fed kept, during the war and the immediate aftermath, kept yields on the debt that the Treasury was selling to finance the war effort low. And then, there was what's called the Fed Treasury Accord, and the Fed became, quote unquote, more independent. But Powell realized, this is, we're facing, like an epic crisis. I've got to, put away that kind of squeamishness about, cooperating with Treasury, and we've all got to go. We need all government, and that's something that we may have to see again. So he's made his mark in a number of areas.
To that end, I want to rewind the clock a little bit to a part of the story that I didn't know this, but in the before times, like just the before times, February 22nd, Powell was actually in Saudi Arabia and was at a meeting of central bankers from the Group of 20. And I'm wondering, how much of what he saw there informed what came out of that. And you tease a little bit about that. I'm just wondering, like, what is your reporting gathered from what he learned when he was in Saudi Arabia for those couple of days?
I think, like a lot of us, in February, he was thinking, okay, yeah, I know there's a coronavirus, but it's it's going to be contained to China and maybe the immediate countries. We're a long way away from it. It's not going to be a sort of earth-shattering event for us, the United States and the Fed. Then he went to Saudi Arabia. He meets the Korean delegation there, and he starts hearing from the Italian delegation, and said, "Oh." So he calls back to the States, and it's a weekend. He calls back to the States and says, when I come back on Monday, midday, I want to go through all the options we've got. Yeah. And so he flies back on Monday, comes down the ramp from his plane, opens up his, email, and he's got all these texts from staffers saying, man, the stock market's cratering, So, and then it was just like off to the races. They did more in a month than the Bernanke Fed did in, a couple of years, all in the space of March, basically.
Hey, Rich, just got about 30 seconds, 40 seconds left here. I mean, he has done a lot, and he's moved quickly, and I think that the world would say, and certainly folks in the U.S. would say, they're grateful for what he's done. Time will tell, though, versus, some of the steps he's taken, the changes in focus, letting maybe inflation run hot, to kind of help out the labor market. Time will tell whether or not all these strategies are smart.
For sure. I mean, that's a very good point, Carol. That there are risks, right? He's pushed all the chips on the table, and there are risks. I mean, some people are worried about inflation, but a lot of other people are worried about another stock market bubble or really housing boom or something, because he's basically gone all in, and as you say, we'll see.
Right.
But
I just think about all these Fed chiefs, though, and let's dealing, with also some of that as well, and getting the economy going. Right. It's like, and then the pandemic. Rich, great read. Thank you so much. Rich Miller, economics reporter at Bloomberg News, on the phone from Washington, D.C. Joel Weber, along with his puppies, letting them in and out. Heard that a little bit in the background. Editor at Bloomberg Business Week. Find that story. It's in the magazine online on the Bloomberg. Great read, right? In terms of
great read.
Jay Powell and his legacy. We shall see. You are listening to Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, December 14th. Tech shares are rallying, the Dow lower, S&P little changed and higher. Let's get right to the numbers, give you the why in a moment here. S&P now at 3666, up 3 points. That is a gain of about 0.1%. Have been fluctuating between gains and losses. The Dow is down 19, a drop there of just about 0.1%. Again, at the best level of the day, the Dow had been up 279 points, up 0.9%. NASDAQ holding on to gains, up 118 points, up another 1% right now. NASDAQ at 12,496. Should point out that the Dow is holding above 30,000. 10-year 0.89%, up 1/32. Gold is down 0.8%, $18.25 the ounce. And crude, West Texas Intermediate, up 0.9%, $46.97 a barrel. Technology shares climbed, but the broader advance in stocks faltered as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. Lisa Hornby is head of U.S. multi-sector strategy at Schroeder Investment.
I think people are really looking through the next couple of months because everyone expects the lockdown orders, the stay-at-home orders to do nothing but increase over this period of time. And so the data should deteriorate. The service side of the economy, which is still obviously weak and has never recovered, is going to probably get a little bit weaker before things start getting stronger and we have enough people vaccinated.
Crude oil is pushing higher as tougher lockdowns from New York to London worsen the picture for fuel consumption before a vaccine is widely available. Among some of the oil names today, we're looking at ExxonMobil. Its shares down 3.2%, $42.39 a barrel. BP down 2.7%, $21.43. EOG Resources down 2%, and Pioneer Natural is down 1.9%. So the S&P 500 index little changed right now, recapping up 1 point, up less than 0.1%. The Dow is down 33, down 0.1%. NASDAQ up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
So, Tim, we know we didn't have a playbook, or at least most of us didn't, on how to get through the global pandemic. That's for sure, right? We've been talking about that kind of nonstop. But I think we kind of maybe do now, thanks to a new book out by David Rubenstein.
Yeah, I think that's definitely the case. I mean, David had spoke to just the biggest names out there about leadership and what they've learned from managing crises in the past.
Yeah, and leaders from all walks of life. He is the co-founder and co-executive chairman of the private equity firm, the Carlyle Group, chairman of the Kennedy Center for the Performing Arts, the Smithsonian Institution, and the Council on Foreign Relations, also president of the Economic Club of Washington, D.C. He's also a colleague. He's host of peer-to-peer conversations on Bloomberg Radio and TV. The book is entitled How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers. Great to have back with us this time on the phone from Bethesda, Maryland. David, nice to have you back on Bloomberg.
Thank you very much for having me.
Hey, listen, so you've been talking to leaders for a long time, and in your book you write, you point out that when you meet somebody, you kind of want to go there. You want to say, so how did you become a leader? How did you rise up? Why are you so fascinated?
Well, I guess when I was little, I was always interested in learning how other people became prominent and famous, and I used to read about them, and I guess I couldn't stop asking people questions. So my mother would say, be polite, don't ask people so many questions, but I wasn't able to resist.
So dozens of leaders you spoke to for this, Dr. Anthony Fauci, Oprah, Jeff Bezos, Marilyn Houston. Is there a common thread that runs through all of their journeys that you took away from the conversations?
Sure. All of them came from, I would say, middle class, lower middle class, or blue-collar families. None of them were really extremely wealthy. They worked their way up. They came from a situation where they typically had some failures earlier in their career. They all tended to have a vision. They were very persistent. They knew they wanted to get something done. They were willing to share the credit with people, highly honest and a lot of integrity. And they rose up in situations where there was a lot of crisis, you could say. In other words, great leaders overcome crises, and many of them overcame crises and really showed their leadership skills during those crises.
So, David, I wonder, if you're not a leader as a kid or as a teenager or in college, does that necessarily mean you won't be a leader later in life? I mean, do you have to start showing some traits, basically, early on? I wondered if that was also a commonality between some of the folks you've talked to.
Most of them were not leaders when they were very young. In fact, if you take a look at the last, let's say, dozen presidents of the United States, maybe only Bill Clinton would be somebody who would have been said as a young person, this person could be president of the United States. And the same is true in other areas. I certainly was not a great leader when I was younger, and many people were not famous when they were young for being Rhodes Scholars or Supreme Court clerks or Heisman Trophy winners. People who become great leaders later in life basically have a tortoise and hare approach. They work their way up, they learn some skills, and ultimately luck helps them get forward. But if you take your own high school class, whoever the senior leader was, or the student body president, what happened to that person? You know, sometimes you don't know because they didn't become famous.
Right.
I often thought the people in my high school class were going to be conquering the world, and then I've never heard from some of them again.
Yeah, it's interesting.
Mine is a pulmonologist in California. He's doing well.
He's doing okay.
Yeah, he's doing okay. He's busy during the COVID pandemic. But David, it struck me that you said that this common theme is that people came from this middle-class background. I'm wondering, we talked a lot about this idea of a K-shaped recovery. The middle class has gotten smaller in the United States. Do you think it's still possible for people to work their way up to these positions of leadership, or has it become so difficult in the United States with student loan debt and the cost of college?
The American dream, I think, still lives on, but there's no doubt there's an underclass in our country now that for racial or other reasons has fallen further and further behind. And I think COVID is going to bring them even further and further behind, because if you don't have technology in the COVID era, you're just not able to really survive. So think about all the families that don't have high-speed internet at home, or can't afford to have child care for their children, or can't afford to send them to schools right now. So that's a sad situation. So I do think that the American dream is becoming more elusive for many, many people in this country. But there obviously are people who still believe in the American dream and have come from reasonable backgrounds and can work their way up. And obviously some people from the worst backgrounds can work their way up, but the odds are harder and harder.
Well, when you look at the kind of bigger picture, David, in terms of our economy and the future of it, and you watch what's going on in other nations like China, who's definitely on a mission to certainly develop some more sophisticated industries and certainly develop their domestic economy, do we need to figure out some new policies, and what might those policies be so that the American dream is not more elusive and that it is, available to more and more Americans, especially at the lower socioeconomic scale?
There's no doubt that our creativity in this country is the envy of the world. Silicon Valley and all the kind of technologies that have been developed there are the envy of the world. But we don't have the population base that China does. And as China becomes more and more capitalistic, I think it's actually going to, bypass us in size in terms of economy. The United States will probably be in our lifetime the second largest economy in the world, not the largest. But you can still rise up and have a very great life in the second largest economy in the world. But we should recognize that China will be a competitor increasingly in the economic world, and it's going to be difficult for some of us to accept that fact, but it's the reality.
If we had one new policy that the incoming Biden administration would put into effect, let's say in their first year, that would help some of those Americans that have been left behind, what do you think it should be?
Well, I would say no member of Congress can get their pay unless we pass bipartisan legislation that addresses some of the problems. Obviously, that's tongue-in-cheek. But clearly, the Congress... I
actually like it. I'm just going to put it here. But anyway, go ahead.
So I think, obviously, the country doesn't work as well as we would like it to work. Yeah. And we haven't seen bipartisan legislation for a long, long time. And we have a perils of Pauline every time the budget is about to expire. So we have to do a better job. I don't know whether the new president can do that or not. But clearly, the system isn't working as well as the Founding Fathers intended. That's for sure.
We only have about 15 seconds left, but who is one leader right now who you wish you were able to speak with for the book that you haven't been able to speak with yet?
Well, I hope to interview Joe Biden when he takes office, or before he takes office. I'd like to talk to him. I've known him for a long time, but I have never interviewed him, so I'm looking forward to that.
All right, sit tight for a second. David, we're going to come right back. We just have to do a little bit of news, but we'll continue the conversation with the co-founder and co-executive chairman of the Carlyle Group. We're talking about David Rubenstein. He's got a book out, How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers. And I'm just thinking, it's a great book to share around the holidays. It's a perfect read.
Perfect gift. I mean, the people in here are incredible.
Yeah. All right, we're going to get back to David in just a second. Right now, though, we do want to do a little bit of world and national news. For that, it's over to Ann Cates in our D.C. studio. Hey, Ann.
Hi, thanks. Good afternoon. The largest vaccination campaign in U.S. history is underway, with health workers getting their first shots. The injections begin an effort to try to beat back the coronavirus as the nation's death toll nears a staggering 300,000. President Trump is backing off a plan to give White House staff early access to the COVID-19 vaccine. Bloomberg's Nathan Hager reports from Washington.
In a tweet, the president says he's directed that people working in the White House receive the vaccine, quote, somewhat later, and he says he's personally not scheduled to get a shot. Sources tell Bloomberg News vaccinations will be offered to critical personnel in all three branches of government who are deemed essential, and they could start as soon as today. The shots will be staggered over the following 10 days to ensure staff don't experience possible side effects all at the same time. In Washington, I'm Nathan Hager, Bloomberg Radio.
Members of the Electoral College are meeting today in all 50 states and the District of Columbia to make President-elect Joe Biden's victory official. The normally routine process is in the spotlight this election year because of President Trump's refusal to concede and his remarks that the voting process was rigged. Congress will officially count the Electoral College votes and declare the winner on January 6th. Wisconsin, meanwhile, has cast its 10 Electoral College votes for Biden. It came about an hour after the Wisconsin Supreme Court rejected a lawsuit from President Trump seeking to overturn the election results. Early in-person voting began today in Georgia for the state's twin U.S. Senate runoffs. The early voting period runs as late as December 31st in some Georgia counties. It could determine the outcome of the races between Republicans U.S. Senator David Perdue and Kelly Loeffler and Democratic challengers John Ossoff and Raphael Warnock. A majority of votes before the November general election in Georgia were cast in person during that early voting period. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ann Cates. This is Bloomberg.
All right, Ann, appreciate it. Right now, we want to get a check also on we want to get a check on business news and also on the trading day. Let's toss things over to Charlie.
Hi, thank you very much. Here's what's going on. It is a choppy Monday, back to work Monday. The Dow lower, S&P higher, barely up by 1 point right now. NASDAQ up 113, up by 1%. Off session highs for all three. Best level of the day, NASDAQ had been up 165, up 1.3%. The Dow had been up 275, up 0.9%. But again, we've got the Dow lower by 33, and just to repeat, S&P little changed, up now by 1 point. 10-year up 132nd, 10-year yield 0.89%. Gold down 0.8%, 18.25 the ounce, and crude West Texas Intermediate up 0.8%, 46.96 a barrel. Technology climbing, the broader advance in stocks faltering as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate it. Want to get right back to David Rubenstein, co-founder, co-executive chairman of the Carlyle Group. He's got a new book out. It's called How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers. And David is also a host of peer-to-peer conversations on Bloomberg Radio and TV. David's still with us on the phone from Bethesda, Maryland. David, if you'll indulge us, I'd love to go through some of the names on your list because it is quite a lineup. And just kind of what comes to mind in terms of their leadership and just talking to them. Jeff Bezos.
Well, Jeff is a person who started relatively late. When you think about it, the company's not till 1994 that he started it, but he's now built it into the company, which is now one of the best known companies in the world, and he's become the richest person in the world. But he still has a great deal of humility, I would say, and a pretty good sense of humor. And I think the interview was one of the most interesting ones in the book. Think about it. Many times the richest person in the world over the past half century have been people who've been relatively reclusive. Howard Hughes, nobody really knew him. J. Paul Getty, nobody really knew him. Bill Gates and Jeff Bezos, both are pretty accessible, and you can get a hold of them, you can see them, you can talk to them. It's not quite what it used to be.
And I love in your book that when you talk about Jeff Bezos, that you had an opportunity, is it right, to have a 1% equity stake in the company and you passed on it?
Well, we actually had an opportunity to have about a 20%. We passed on that. We did get 1%.
Oh, you did get 1%.
But we sold that at the IPO, so we thought it was going nowhere. That was our biggest mistake.
It happens.
Could be worse. What about when it comes to someone like Justice Ruth Bader Ginsburg, who we lost earlier this year?
Yeah, she was a person who weighed about 100 pounds when I interviewed her at the 92nd Street Y in New York. 90 of those pounds were her brain. Incredibly smart person, but very difficult to interview in this sense. When you ask somebody a question in an interview, you expect an answer within a second or so. But she would pause for 20 seconds or so, and you say, oh, is she having a senior moment? Did she not hear me? Was it an offensive question? But she was actually thinking about what she wanted to say, and then would say it in paragraph form. So she was very, very good.
Well, and what about someone like Oprah Winfrey, which is just, I think for all of us would just, I think, be so nervous sitting down with her. But what was that like?
Well, it's hard to interview the greatest interview of them all, perhaps, but I've known her a little bit, and so it wasn't quite the first time I'd met her. So it was okay, and it went well. But she didn't really need an interviewer. I mean, she was giving a master class in how to be interviewed and how to interview. So I was just mostly sitting there watching.
But what do you want to know as a leader? Like this is all about leadership, and what was it that just kind of stood with you about her?
Well, she is somebody that came from very, very poor background, and now that she's become very famous and wealthy, she's trying to give back. She's involved in philanthropy, but her greatest skill set, she would say, is not being an interviewer, but being a listener, and she has empathy with the people she interviews, and that's what she says is her strength.
What about Yo-Yo Ma?
Well, Yo-Yo is somebody I've come to know pretty well through the Kennedy Center, and he's a person that, yes, he's the best known and the best cellist in the world, but that's not what he cares about at this point in his career. He's about 65 years old. He cares about other things. He wants to perpetuate the idea that the arts make people better people, better humans. And so he's really interested in getting people to learn more about the arts, not just listening to him play. So he spends at least half his life now trying to get people to become more familiar with the arts and appreciate the arts, all kinds of arts. And so he's an infectious personality, and he's only changed a little bit because he's a person that doesn't like to shake hands. He likes to hug people. And in the COVID era, it's harder to hug people, so he had to change his technique there.
Well, I have to say, one of the things I like about the holiday season, David, is the Kennedy Center honors. I still talk about Led Zeppelin and Heart doing Stairway to Heaven. There's like nothing like it, but I do look forward to it, and I think about the importance of arts and culture in our community, and I do wonder about the hit that it is all taking because of the pandemic, everything being shut down. Yeah. What are your hopes and expectations when we get on the other side of this?
Well, the performing arts world has been decimated, and I would say probably 10% of performing arts arenas or the stadium or venues are not going to probably reopen again. Wow. The Kennedy Center, we are struggling financially as well. Obviously, Lincoln Center as well, but we will survive for sure. But there's no doubt that we had to lay people off. We've had to furlough people. The Kennedy Center Honors will try to do it again in May in some kind of virtual, virtual, and partial in reality, and then we'll try to do it in December probably as well. Maybe have two this year or next year if everything works out. But it's hard to put the whole thing together right now when everybody's in a COVID world.
Well, David, what do you think the role of the federal government has to be in terms of, we can go through a list, whether it's cultural institutions, arts and entertainment. I look at the restaurant community, which I think is part of the fabric and culture of our, major cities and our society, and they are also getting decimated. What's the responsibility of the federal government where it feels like that has really been forgotten?
Well, yeah, suppose you work in a food truck, suppose you work at a restaurant, you're probably not going to be employed that readily right now, and it's a tough situation. Many of these people are not people who can readily go get another job so easily. So it's very tough. I hope the most important thing we do in the next week or so is pass some legislation that will actually help with the economy and help these people that need it the most. So it's a real sad situation, but the Congress could go home without passing legislation. I think that's really going to hurt the economy if that happens.
Well, do you think that would have happened when you were working for the Carter administration, that we would have had a Congress that went home?
Well, I would say we had our challenges for sure, but there was bipartisan legislation in those days. No major bill until the Obama health care legislation had ever passed Congress without some bipartisan support. And that idea has gone away. Republicans are afraid to support Democrats and vice versa. So if Joe Biden can do anything, it's hopefully that he can get people to support some kind of bipartisan compromise sometime, because otherwise we're just going to be stuck with this same kind of perils of Pauline Congress for many, many years into the future.
One thing I've been thinking a lot about during this time is the idea that a lot of people have been struggling, and it's been a difficult time for a lot of people, especially for artists. But I also wonder if we'll look back on this as a time when perhaps some of these artists created some of their best works. Is there any indication at this point, David, that you are seeing that from emerging artists, from up-and-coming artists, from musicians around the world?
Well, you can see Paul McCartney just come out with an album that's been very highly rated, and other artists have as well. Willie Nelson has a new album out. A lot of the older artists are coming out with great things because they've had to stay at home a bit, and they're doing these things by themselves often. I would say young artists will clearly be experimenting now, and I just worry that some people may get disillusioned because they can't afford to support themselves.
Yeah.
Willie Nelson and Paul McCartney probably can, but some artists who are just struggling are probably not in a position to really earn any money right now. Many artists are just not able to really get any so-called gigs right now because there's no place to perform.
Hey, I want to go back to your list of leaders that are in your book for a moment. As we mentioned, we are talking, just for our audience, David Rubenstein of the Carlyle Group. He's got a new book out, How to Lead, Wisdom from the World's Greatest CEOs, Founders, and Game Changers. You have some CEOs, and I think about Indra Nooyi, former CEO of PepsiCo. Tell me a little bit about, what stood out for you. And, she's a rare breed as a woman, as a black woman, at the head of a S&P 500 company. We just don't have a lot of them.
Well, I think at the time she was running Pepsi, she was the only immigrant woman running a Fortune 500 company. She is somebody that had a technique that she described in the interview where she would write letters to the parents of her senior employees, giving them a kind of report card. And obviously, when your mother and father get a report card saying you're doing a good job, they will call you up and say, what a wonderful boss you have. And it kind of tended to bond the employee with ingenuity. It was a very good technique, and obviously it's one I thought of maybe I should do as well.
When you look out at the landscape today and what's happening across the business world with COVID, is there a leader that stands out who really emerged during the pandemic as taking a clear leadership role?
Well, there's one person who has stood above everybody else, and his name is Tony Fauci. Although he was criticized for lots
household name now, right?
Well, yes, but I mean, he was criticized for lots of reasons, and he's had to have security because of a lot of the threats made against him. But the truth is, he did tell the truth from the beginning, and he was basically somebody who was trying to get things done. And sadly, we have 300,000 people that have died. Hopefully, we can arrest that with the vaccine and other things. And I do give the credit to the administration for coming up with the vaccine. It was a heroic effort to get it done in less than a year. Usually, a vaccine takes 4 to 7 years. So if we hopefully can get people to take the vaccine, which is not easy to do, and we can let people who are healthcare professionals really have a big say in what's going on, I think we can make some progress by the middle of the year.
And forgive me, I misspoke. Indra Nooyi, of course, an Indian American, so forgive me for how I characterized her.
Right.
Yeah, forgive me. David, but I do want to ask you, why aren't there more women? Why isn't there still at this point more diversity when it comes to corporate America? We've been talking about this for decades. Why are we not seeing it? You understand leadership. You understand, why isn't it happening?
Well, a couple of reasons. One, since the dawn of civilization, men have tended to be more dominant than women for all the reasons that we probably know. So it's been only in the last, 100 years that women have had the right to vote.
Right.
And only in the last 20 years that a woman has been taken seriously as a CEO. Very few. When Katharine Graham was the CEO of Washington Post, she was the only woman running a Fortune 500 company. We now have made progress, but not as much progress in some ways as countries around the world are doing. So we have a long way to catch up. There's progress, but it's a long way to go.
We do see certain states, and indeed even measures federally, I believe, to try to encourage diversity for public companies.
Or pipelines and yeah.
Yeah, is this the right way to do it, David?
Well, some countries have now mandated that there have to be a certain percentage of women on boards. And that's not been done in this country, though, so much. But there has been a proposal. The head of NASDAQ recently suggested that NASDAQ-listed companies have to do much more than they're doing. And she's a person who used to work at Carlyle, Adina Friedman, and we'll see whether that has an impact. I suspect, if I live long enough, I will live to see more diversity. But I wouldn't hold my breath that all of a sudden there are going to be, a majority of women running Fortune 500 companies in the next 10 years. I don't think that's unrealistic, but I do think it's realistic to see progress being made.
Hey, David, just to wrap up, your book is all about looking at talking with, all these different leaders, finding commonalities, just getting their story and what it took to rise up. Is there anything that's changed in your leadership as a result of these conversations?
Well, I realized that I'm not as good as a leader as I wanted to be. I've learned a lot from these people, and I said, I got to work harder. So I'm going to start working harder to be a better leader than I've been.
So constantly learning. Do you have a favorite conversation?
Well, I really enjoyed the one with Jeff Bezos. We did it in front of 2,000 people, and he had a great sense of humor, and people were cheering. So it's always good when you have an audience, and that's probably better. I like doing interviews with a big audience.
Well, I know our audience certainly enjoyed listening to you. David, thank you so much. Such a wonderful chunk of time. We really appreciate it. David Rubenstein, founder and co-executive chairman of the Carlyle Group, host of the David Rubenstein Show, peer-to-peer conversations on both Bloomberg Radio and Bloomberg TV, and his book, check it out, came out in September, but it's great reading, especially for now. And I'm thinking as people are unfortunately hunkering back home or home for the holidays, How to Lead: Wisdom from the World's Greatest CEOs, Founders, and Game Changers. I love hearing people's stories.
Yeah, and the fact that Dr. Fauci is included in this, just, I mean, he, as David mentioned, he's become a household name at this point.
Yeah, absolutely. And, you know, you think about the different, you know, he's been very much involved in the AIDS pandemic. I mean, just you think about over the years what he has seen. And I think at this time, this kind of crisis, a health crisis, like these are the kind of leaders you want to have in place who understand history, understand how it all works.
By the way, he did say today that he would get the vaccine in a couple of weeks and do it on camera.
I did see that.
Yeah.
I think that's a good thing.
I think so,
I think
too.
you're going to have to see leaders, speaking of leaders, out there front and center getting this vaccine. All right. Our thanks once again to David Rubenstein. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. Bloomberg Quick Take. Are you ready?
I'm ready.
I know you've been actually peeking at the chart of the day.
Yeah, I've been peeking at the chart. Or am I not supposed to do that?
No, you're allowed to.
Okay.
All right, get you set up. All right, we're going to talk about some names that you definitely know when it comes to the chart. We'll get to that in just a moment. Right now, though, back to your top business stories and the trading day. Charlie, we're almost there.
We are. We've got 28 minutes to go ahead of the closing bell. Got to mention Song of the Day coming up with our Dave Wilson. We've got the S&P down 3 now, drop there of 0.1%. The Dow down 76. That's a drop of 0.3%. Choppy session on this Back to Work Monday. NASDAQ up 107, though, higher by 0.9% at the best level of the day. NASDAQ was up 165, up 1.3%. The Dow was up 279. The S&P had been up 34, up by 0.9%. But right now, looking at a loss of just about 3 points on the S&P. Tech shares are advancing. The broader advance in U.S. stocks faltering as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. S&P did turn lower in afternoon trading. We've got the 10-year yield now at 0.89%. Gold is down 0.6%, 18.28 the ounce, a reversal for crude trading higher, up 0.9%, 46.98 a barrel on West Texas Intermediate crude. Vaccines are now being shipped by air and truck to hospitals and nursing homes around the country, but how far will the vaccine go in getting America to reach so-called herd immunity? Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
Herd immunity is a concept where the virus really cannot, spread within a community because enough people are immune and there's just no place for the virus to go. It's going to depend on getting the vaccine out there. We're going to need to invest in the vaccination systems that actually deliver vaccine to people who otherwise don't even get the flu vaccine. But then also it's going to be a lot faster if we can get on top of the pandemic in terms of more social distancing and mask wearing.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Meanwhile, a German study confirms findings of a good safety profile and robust induction of antibody responses for the Pfizer-BioNTech vaccine. Pfizer shares, they're down 4.7%. BioNTech down today by 15%. Among some of the other vaccine names, AstraZeneca down 7.7%. AstraZeneca buying Alexion Pharmaceuticals out of Boston. That stock surging today by 29.8%. Moderna is down now by 1.3%. Recapping, stocks are mixed. S&P down 8, drop there of just about 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that. You're listening to Bloomberg Business Week, and this is
on their very first album, which, if I recall correctly, had songs like "Pick Up the Pieces."
Oh, I cheated and I didn't cheat in the right way.
Well, no, you did just fine. At least you had the original group right.
Well, I'm going to say the song was like kind of easy because they just kept saying it. So got work to do. You're talking about Disney and Netflix.
Yeah, Disney's got work to do. And, Friday, the story was all about Disney Plus and how they had more than 86 million subscribers at the start of this month. And we'll look at the growth. But at the same time, Disney's trying to play some serious catch-up with Netflix. And not just when it comes to the number of subscribers, Netflix was over 195 million at the end of the third quarter.
Right.
But also when you look at stock performance, and that's what the chart focuses on. It goes back to November of last year when Disney Plus started operating and just does a basic comparison between the two companies. And over that period, Netflix was up 71%. Disney, thanks to Friday's gain, was up 29%. But a lot of that really just came in the past few weeks.
Right.
I mean, they've been hurt.
Right.
What's gone on with the movie business, the television business, the theme park business.
The cruise business.
The cruise business, absolutely. So they've had a lot to kind of work through. But it's just a matter of kind of showing where the competitive position stands, when it comes to, the stock price as well as the business. We'll see if Disney, in essence, becomes more of a streaming company over time. They're certainly moving in that direction. But does that close the gap with Netflix? I mean, there's a lot to be seen going forward. And if you want to see this chart, folks, send me an email. I'll get it to you along with the explanation that goes with it. And everything I do going forward, the email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So I at first, I mean, at first I was going to say timeout. You can't even compare these two companies because they are just so different in terms of the assets that they control.
It's not apples to apples.
It's not apples to apples. But so you brought in all the caveats, Dave. But at the same time, I do feel like they're never going to be, unless Disney were to shed, a big portion of its assets or at least its partnerships with the theme parks and the cruise ships. Netflix doesn't have any of that weighing it down, and it's also just hard to compare anything to Netflix because
pretty capital intensive what Disney's got.
It is capital intensive, and sure, Netflix is capital intensive when it comes to buying the content,
right.
And it burns a lot of cash.
True,
but it's sort of detached from reality, right?
To a point, all this is really meant to do is, as much as the focus is increasingly on streaming at Disney, given, how quickly Disney Plus has been adopted, 86 million subscribers in 13 months is nothing to shake a stick at.
Yeah.
I mean, they're a long way from delivering the kind of growth that we've seen with Netflix and reaching their numbers. And, the stock performance, there's definitely a contrast.
I just, it's interesting. Disney's with a market cap of almost $308 billion, and Netflix is $230 billion. For some reason, I thought Netflix was off the charts.
It has been in the past been worth more than Disney.
Yeah,
but
not right now.
Yeah, not right now. Dave, I wonder, are you seeing this as a zero-sum game play out? Like, would you see the future of people subscribing to both Disney Plus and Netflix?
That's going to be the question. I mean, because you think about it, people historically paid one cable bill and, complained about that. And now you've got all these services out there, and Netflix and Disney Plus are just two of them. Think about things like HBO Max, for example. Is it going to be the same situation down the line? And at what point are people going to say enough is enough? I mean, that's a whole nother issue. And certainly when you think about Disney Plus's position, it's going to be part of the calculation in terms of their ability to catch up.
Depends who you want to have. You're going to have a couple of, streaming services. Will it be Disney and Netflix and others or whatever? So we'll have to figure it out. Hey, let's get over to D.C., check in on World and National News once again with Ann Cates. Hey, Ann.
Hi, thanks. Good afternoon. Electoral College members in all 6 battleground states where President Trump most fiercely contested the results cast their ballots for Democrat Joe Biden today. The 16 electors in Michigan voted for Biden, followed by the 63 votes cast for him earlier in Arizona, Georgia, Nevada, Pennsylvania, and Wisconsin. Biden will have enough electoral votes to be officially declared president-elect when members have cast 270 ballots, which is expected after California votes. Biden's advisors say he is entering the White House with a clear mandate from the American people. Bloomberg's Amy Morris reports from Washington, D.C.
Biden's team is confident the president-elect will be able to turn the page and follow through on his campaign pledge to unify the country and keep other promises, starting with providing economic relief and fighting COVID-19. Mike Donnellan, who will be a senior White House advisor in the Biden administration, says there's a strong need to bring the country together and that it is in the best interests of the country for congressional Republicans and the Biden White House to work together. In Washington, I'm Amy Morris, Bloomberg Radio.
Senior U.S. officials will begin receiving coronavirus vaccines this week as part of updated federal continuity of government plans that now include terrorism and pandemics as threats to the nation and its leaders. The effort comes after President Trump said that White House aides should receive the vaccine somewhat later in the program. Still, senior administration officials say doses are expected to be administered at the White House. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Ann Cates. This is Bloomberg.
All right, Ann, appreciate that update. You're listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic in our Bloomberg Interactive Brokers studio, and giving us the world of national news. But one of the things that we might have, wanted news, checking out our Google Gmail accounts this morning, Tim, it wasn't so easy.
No, this was amazing to see play out on Twitter because I was already at work, not to, talk about how early I get in, which
You get in early.
It's totally fine.
For your show at 9 a.m.
Yeah, for a show at 9 a.m., that's right. But at one point on Twitter, like a little before 7, everybody started talking about how they couldn't access their Gmail. Gmail was down. And remember, a lot of companies use Gmail for their official communications. And it wasn't just Gmail, it was YouTube. And then people started saying Google Classroom, this tool that teachers in virtual environments are using to help educate students who are at home. That was down too.
You realize Google, how much they touch within our world, whether it's our personal world, our professional world, for our kids with education. I didn't even think about that. So it was down for a while. I know I've got one story in front of me that says that they said the vast majority of their user problems should be resolved. This was by around 8:30 this morning.
Yeah, and that indeed became the case, but this was also one, a lot of times when you see outages like this, they're localized outages that happen in different regions of the world. This seems like it hit the United States. It also hit Europe as well. And Google confirmed that there was an outage for the majority of its services. And as you mentioned, a little before 8, so about 90 minutes after it seems like complaints first started rolling in, the issues seem to be resolved.
This kind of stuff is just, I take for granted that everything's going to work. And then when there's a problem, it's like, what do you mean? Why doesn't this work? But you realize how much we rely on certainly social media and these search services. And like I said, you said for Gmail, that it's, different offices are using it. You think about how integral this has become in our lives.
Google owns Nest, the thermostat and camera company too. Google Maps is what I used to get.
My fear is one day all those systems are just not going to, I can't get into my home. All right, you're listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are mixed. S&P very close to the worst level of the day. NASDAQ well off session highs. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed, and like you said, well off their opening highs. Dow's down 148 points, was up 279. S&P's dropped 12, and NASDAQ pairs gains to up 73. The U.S. 10-year yield at 0.9%. Gold is down 11, and transports dropped 235 points. Among the main 11 SV sectors, only consumer discretionary and tech were in the green. And leaders to the upside in the Dow, McDonald's and Intel, while Chevron and Disney led to the downside. In other news, homebuilder NVR is buying back $300 million, and Fauci says he may get the COVID vaccine within the next couple weeks. In deal news, AstraZeneca is buying Alexion in a $39 billion deal, and wrapping things up, PayPal rose to a record. Live from the first and breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. And two additional headlines to pass along to you. First of all, Johns Hopkins data showing that the U.S. COVID-19 deaths have topped 300,000. And it is goodbye Silicon Valley. Aloha Hawaii. Oracle CEO Larry Ellison says he's moving to Hawaii. He'll be living on his semi-private island of Lanai. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the drive to the close. We've just got about 11 minutes left in today's trading day. It does feel like we're taking a little bit of a breather, a break, if you will, on this Monday as we continue to watch those virus headlines, those deaths from COVID-19. That certainly will make you kind of stop for a moment, right?
Yeah, 300,000.
Yeah, in the United States
That's
alone.
Staggering.
And we're getting ready for what we think will be probably a rough 4 to 6 weeks here. So let's bring in our guest, Yana Barton. She's co-director of growth equity at Eaton Vance. She is with us once again on the phone from Boston. Yana, nice to have you here with Tim and me. How are you? How are you doing? Are you still working from home?
I'm working from home, and my kids are working from home as well.
Yeah,
so
I know.
Upset.
You're in good company.
Yeah, exactly. Well, what's it like around the Boston area?
Well, we're all working remotely, but I think as it relates to just, the sentiment and kind of bringing it back to the market, who would have thought that would have made up as much, work as we have? The market is up over 15%, but I think the most important story is that the average stock has lagged, and that's good news for stock pickers, and that's what we're kind of focused on as we're awaiting 2021 with the rest of the world and kind of turning the page on 2020. There's a lot of room for an average stock to continue to lead into the next year, and I think that's the most important headline that probably is not getting enough attention.
So what are the companies, what are the stocks, what are the names that you're watching?
Absolutely. So, again, going back to the fact that it's been a very narrow market in terms of its leadership, only tech, consumer, comm services, and materials have outperformed, which means that we've got majority of the market that has lagged, and top 5 stocks, just to give you a stat, has driven more than 2/3 of the overall market's return. So that means that those top 5 had a return year to date that has been averaging about 50%, while the rest of the index has returned 9%.
Right.
So we're focused on healthcare, industrials, and other pockets that have lagged because you're getting both the value proposition and growth.
All right, I know those few, handful of names off the charts, but every time Yana, somebody says, it's done. Let's go into the value names and go into the rest of the market, and then all of a sudden those names just take off again. So how do you reconcile that? And I know momentum sometimes creates momentum, but these are huge, successful companies, and you kind of understand their market dominance.
Absolutely. I think growth can continue to do well, and value can do well as well. And I think seeking those growth at a reasonable price story will never go out of style. And that's why I keep going back to healthcare, because it's been such a laggard, and you're getting true value because right now healthcare is trading at over 25% discount on a next 12-month basis on a multiple, while having a very solid top line and earnings growth story. So you can pick up that growth, but actually get it at a discount relative to the market. Same with industrials. So I don't think you have to be forced to make a choice. I think right now, balanced approach and one that is active and very selective will do well in the next year.
How much attention do you pay to stimulus or lack thereof, and that changing your own outlook for 2021?
Plenty, and I think you bring up a really good point, which is if you look at the performance to date, much of it has been driven by sentiment. Again, if you look at just the multiples in the market at the beginning of the year, they were about 17 times, and right now they're just shy of 22 times. So basically, you're paying up for earnings on the come, and much of that sort of sentiment shift is driven by our optimism on liquidity and obviously the vaccine and a lot of things going right for the overall global economy. So obviously more stimulus, and so far we have very positive both fiscal and monetary support is a good thing for both the multiples and the market.
So when you gather your team virtually on a Zoom or whatever platform, Yana, that you're using, what are the things that you say, listen, we got to make sure we're keeping an eye on this and that, in terms of kind of the unpredictables. I don't want to say black swans, but the things that could either be ultra positive for the financial markets or ultra negative for the financial markets come 2021.
That's a great question. I think, investing is all about looking forward, and unfortunately, when you're predicting the future, there's a high probability that you will be wrong. Just read all the headlines as we started 2020. There was like...
Great, so why are we talking to you then? I'm just going to put that out there.
Yes. But I think, what we're asking our analysts is tell me what the world will look like 3 to 6 months from today, when unfortunately you mentioned the 300,000 statistic daily, occurrences of picking up COVID. But I think we're going to start tracking, what percentage of the population has been vaccinated, and that will be a really great pull to drive back that consumer into the market and us going back to doing things that we haven't done in months, right? And there will also be a lot of recovery, particularly within the consumer space as it relates to travel, restaurants, all of those sort of areas of the market that have been left for dead just because we have to had this shift in both the consumption and just the way we live everyday life. So I think what we're asking them to do is kind of go into the future and tell me what the earnings recovery will look like. And many of these companies are going to recover, and we're already seeing evidence of that, which is a little bit of pull on top line drives a lot of margin recovery.
Just very briefly, because we only have about 10 seconds left, what is your timeline for sort of this return to normalcy?
Well, that's a tough question. I think, 6 to 12 months as it relates to stocks because they're a leading indicator. But in terms of just economic activity, I think it will be longer. And I think, a lot of it has to do with the vaccine, people feeling comfortable and us getting access to it.
Yeah, I guess our kids not doing homework in school, or school at home, I should say.
Yeah, definitely, right? Yana, thank you so much. And by the way, Yana managing the Eaton Vance Focused Growth Opportunities Fund, which is really beating most of its peers over the last 3 years and 5 years. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Bennett. There you have it. Sound of the closing bell at the New York Stock Exchange. As we wrap up a losing Monday, the Dow, the S&P close at session lows. NASDAQ advances. Folks from the Walker & Dunlop ringing that closing bell at the New York Stock Exchange. Stocks lower for a fourth day as investors assess the prospects for a federal spending package and the likelihood of further virus-related economic restrictions. S&P capping its longest slide since September, now 1.4% below its December 8th record. NASDAQ 100 index did advance today, up by 0.7%. NASDAQ up 62, a gain there of 0.5%. Turned out to be a mixed Monday. S&P lower by 16, down 0.4%. And the Dow tumbled 186 points, down by 0.6%. 10-year yield 0.89%. Gold down $10 the ounce, lower by 0.6%, 18.28. And West Texas Intermediate crude up 0.9%, 46.97 a barrel on West Texas Intermediate crude. So again, mixed day for the U.S. stock market. Yana Barton is co-director of growth equity at Eaton Vance, and moments ago right here on Bloomberg Business Week, we asked her, with vaccines on the way, what might that suggest for the market outlook?
There will also be a lot of recovery, particularly within the consumer space as it relates to travel, restaurants, all of those sort of areas of the market that have been left for dead just because we have to had this shift in both the consumption and just the way we live everyday life.
Two prominent declining stocks today. They were among last week's high flyers. Airbnb, DoorDash fell after a pair of Wall Street analysts warned that first-day trading surges last week and their valuations are at precarious levels. Airbnb lower today by 6.6%. DoorDash tumbling today by just about 8.6%. Recapping, S&P down 16, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like. Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, time to take a look, a little bit of a deeper dive into today's trade. Carol Master along with Tim Stanovic of Bloomberg Quick Take right here in our Bloomberg Interactive Brokers studio. So, big picture, Tim, we had, kind of we saw that kind of throughout the day, kind of a more negative risk-off trade today. 135 names in the S&P 500, higher today, 370 lower. And if we look at the major industry groups, you're looking at that, aren't you?
I'm looking at it. Only two were higher on the day. Consumer discretionary and information technology.
Yeah, and the bottom of the pack, once again, those energy names down 2.8%. I got to just say, and I want to bring in Bloomberg News cross-asset reporter Sarah Ponzak. Sarah, good to have you. I know you're on the phone from home. Tim and I pulled up the S&P 500 year-to-date list. Do you know Etsy is the best performing name in the S&P 500? It's up 283, almost 284%.
You may not think of it immediately, but Etsy has really been one of these stay-at-home stocks too. People staying at home just as they're ordering on Amazon.
Yeah.
Etsy has all of a sudden become this go-to shopping place, of course, an online mecca, and it is pretty unbelievable. And it's one of those names that you're right. It would surprise people if you haven't been paying very, very close attention.
Do you want to care to guess? No cheating, Sarah. Who's at the bottom of the list?
Let's see. At the bottom of the list, if I take a cop out and I just think broadly, I'm going to go with some energy names.
Very close, very close.
Yeah, very close, because there's a bunch of energy, Marathon, Diamondback, Energy,
Occidental's on there.
Oh, I just looked. I just cheated. Carnival. I was about to say, or it's got to be a cruise line.
Yeah, or right, like somewhere in the hospitality space, right?
Yeah, Etsy's a surprise as the best performer, but not a surprise perhaps as a worst performer as Carnival.
Not at all. So, all right, Sarah, what else are you seeing in today's trade that you think is kind of interesting?
We continue to have this push and pull, especially heading into the end of the year. This is our last full trading week. Hard to believe, considering how long 2020 has felt. I know, pat yourself on your back. You're almost there.
Yeah, not yet though, Sarah.
Not yet. Last full trading week. It's also going to be a busy one. Mm-hmm. But today also encapsulates just where we stand. At the point in which we are hearing from Governor Cuomo and Mayor de Blasio in New York City saying that residents should prepare themselves for yet another shutdown. London also entering another very restrictive lockdown as well. We see COVID cases rising, but on the flip side to that is still the hope and the optimism for the vaccine, the first vaccine given in New York City today. So you just have these very, very opposite headlines and pictures that are almost creating this tug of war in markets. And Lou Wang, my colleague, over the weekend, she wrote a story kind of just listing where Wall Street strategists stand on their year-end targets for 2021. She puts together the survey. And what's amazing is just the wide disparity that we see between strategists even. Some calling for a 20% rally, some calling just for a 4% rally. Granted, they're all calling for stocks to continue to rise, but such dispersion there. And what it really boils down to is whether or not investors believe that the vaccine has already been priced into stocks at these levels, or if we have further to run.
That's a good question.
Right? Yeah. Like, was there any consensus or no? You just said that was the whole point, right? That it was nobody really agreeing.
There really wasn't too much consensus, but what is really interesting as well is that if you look at the average call for the year-end S&P target for the end of the year in 2021, it still calls for a gain of 10%, which is actually one of the best expectations from strategists heading into a year on record. And it's pretty unbelievable that that sort of optimism is expected after the 2020 that we just had. If you look at the S&P 500 year to date this year, in the face of all of the risks, all of the issues that we have all lived through, that we have all felt, that companies have clearly faced, the S&P is still up 13%. So you're calling for another 10% gain on average next year too.
All right, Sarah Ponczek, thank you so much. Bloomberg News cross-asset reporter Sarah Ponczek on the phone in New York City. All right, you're listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you?
Wilson! Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave! Who? Dave!
Hey, Mr. Wilson!
Hey, Mr. Wilson. What's the stock of the day?
Solar Winds.
A familiar one if you've been following the hacking story, right?
Absolutely. That's what this is all about. The company supplies software for monitoring computer networks, works with more than 300,000 customers worldwide, especially in business, government, and education. SolarWinds was founded in 1999 and went public in October 2018. The ticker is SWI. Now, the shares fell to a record low this past March and then more than doubled to set a record high last week. SolarWinds slumped today after the disclosure of a cyber attack related to its monitoring program called Orion. Hackers used updates to Orion to infiltrate U.S. government agencies. The Washington Post reported...
It's terrifying. Can I just say, Dave, that's terrifying.
Absolutely. And the Washington Post reported that the hackers had ties to the Russian government. SolarWinds disclosed in the filing that the cyber attack occurred between March and June and may have affected as many as 18,000 customers. The company alerted the customers and provided a software fix, yet the damage was done to SolarWinds shares, which dropped the most since the company went public. They lost almost 17%.
Wow.
That's painful. I am just terrified. I'm knock on Formica. I've just been amazed that we haven't had some kind of serious takedown of some of our systems.
Well, I think what's exposed in this story is the fact that the U.S. government uses these third parties, and that sort of can be the weakest link when it comes to security.
Right, government agencies, the military. I mean, it's all over the place, or so it seems.
Yeah, exactly. Yeah, this is definitely, I don't know that we've spent enough time on it, but it's definitely an important story. Hey, Dave Wilson, thank you so much. Great stock of the day, SolarWinds, SWI is the ticker. Monday's over.
That's it for me.
Yeah, I got a couple more hours to go. But yeah, I mean, I don't know. What stands out for you today?
The hack, the 300,000 deaths, but also coming at the same time that we are seeing those images of the first shots being administered here in the States.
Yeah, and I would have never thought like a few months ago, right? But here we are finally, and we'll move forward. Listen, you have a good evening.
Thank you, you too. I will see everybody tomorrow.
Sounds good. Tim Stanovic of Bloomberg Quick Take. Catch him at 9 a.m. tomorrow morning, too, on Quick Take. All right, let's get back to world and national news. For that, it's over to Ed Baxter in San Francisco.
Hey, Carol, Mark Mills in for Ed today.
Hi, Mark. I'm so sorry. Well, good to have you here. Hi, Mark.
All right, thanks. Hope Ed's enjoying his day off. On the day when the nation's COVID-19 death toll reached a staggering 300,000, the largest vaccination campaign in U.S. history is underway, with health workers getting the first shots. In New York, an early epicenter of the crisis, critical care nurse Sandra Lindsay received the first shot in the state of New York at Long Island Jewish Medical Center in Queens.
It was an emotional experience working on the front lines alongside my team. I saw a lot of pain, hurt, suffering, death, and so I felt a huge sense of relief after I got the vaccine.
Despite the great relief over the vaccine's arrival, the virus continues to rage around the U.S. New York City Mayor Bill de Blasio said the city may need to take strong measures to save lives.
You have to be ready now for a full shutdown, a pause like we had back at the end of the spring.
Electoral college members in all 6 battleground states where President Trump most fiercely contested the results cast their ballots for Democrat Joe Biden on Monday, effectively cutting off the president's path to overturning the election. After Michigan's electors voted for Biden and Harris, Governor Gretchen Whitmer said it's time to focus on fighting the coronavirus.
Now is the time for us to put this election behind us and to focus our efforts together to defeat our common enemy, COVID-19.
Democratic Senator Bernie Sanders plans to keep up pressure to include $1,200 stimulus payments for most Americans in any final year-end coronavirus relief bill in Congress. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark Mills, thank you so much. Mark Mills there with an update on world and national news. Right now, joining me on an interesting story that's on the Bloomberg is Charlie Pellet of Bloomberg News. This story, Charlie, actually from Dow Jones, Wall Street Journal. We're going to get into commercial real estate in just a moment with Ken Swig of Swig Equities. But what's interesting about this, when Blackstone does something, you sit up and take notice. They're one of the world's largest real estate investors. They've got a portfolio of about $341 billion, and they're amping up their bet on biotech lab space.
Indeed, specifically, this is where these products get research, development. These are the offices. And just an interesting question, though, as I read this story, with all of the work at home, makes you wonder, are people going to come back to the office? Will this be relevant 6 months, a year from now, once everybody gets vaccinated? Really, to me, this calls into the question of whether people will be returning to offices and whether this will turn out to be a good bet for the company. But in the meantime, you got to make this stuff somewhere, and this is where it happens in Massachusetts, Cambridge, and this is the bet that they're making.
Yeah, listen, and this is specifically on biotech lab space and other life sciences real estate. And, we're seeing increasingly investors who are interested in life sciences real estate during the pandemic. And you're right, Charlie. People are maybe taking a look at this pandemic and thinking, okay, wait a minute. This was something that caught so many people off guard, including investors, including, the real estate space. And so maybe they're thinking, okay, so how do we come out of this? And maybe there is greater emphasis. Certainly, if you talk to the virus hunters who say there are other viruses out there and we better get on it, you would think that there's going to be more need for life sciences space and demand, because it's been one of the few bright spots when it comes to commercial real estate.
Absolutely right. Indeed, we're talking about a 30-acre campus here right next to MIT in Boston. Why do they want to be there?
Well,
that's where you got smart kids, you got students, you got faculty, you got research. Of course, you want to be next to MIT.
Yeah, it's really fascinating. We're going to talk a little bit more too, because about commercial real estate, as I said, with Ken Swig, because we know so many other types, whether it's commercial real estate buildings, hotels, malls. Man, they've really been hammered by the pandemic. All right, Charlie Pellet, thank you so much. Much appreciated. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 Index capping its longest slide since September, down 4 in a row. The S&P, by the way, 1.5% below its record set on December 8th. Stocks fell as investors assess the prospects for a federal spending package, along with the likelihood for further virus-related economic restrictions. Today, the S&P down 16, a drop of 0.4%. The Dow down 184 points, down 0.6%. NASDAQ did have a gain of 0.6%, up 0.5 at the best level of the day. NASDAQ, though, had been up 165 points. So a reversal for the U.S. stock market. The 10-year, the yield now 0.89%. Gold down 0.6%, 18.28 the ounce. And West Texas Intermediate crude up 0.9%, 47 even a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. You are listening to Bloomberg Business Week. I'm Carol Master in our Bloomberg Interactive Brokers studio. How to think where I'm going. It's one of those days. I know where I'm going because I want to bring in a guest who's really a friend of our show. It's Ken Swig. He's president at Swig Equities. It's a real estate development and investment firm, commercial and residential properties in New York City. And we always remind our listeners that Kent was the last in-studio interview that we did before we went into lockdown and shutdown and working from home. It was on Friday the 13th. So it's great to check in once again, and we've been able to do that throughout the pandemic. Kent, nice to have you back with us. How are you? Are you at home? Are you back? You've been in the office, I know. Are you still there?
Yeah. It's a pleasure, first of all, and how are you on a Monday rainy day?
Yeah.
Yes, I'm in my office, and it's magnificent to be here. So we're social distancing, we're wearing masks, we're doing all the things that we're supposed to do. But it's wonderful to be here in the office in Manhattan and working with staff. It's magnificent. How much longer? We're not sure what's going to be for the rest of the month, but for now we're here.
Yeah, well, and that's what I wanted to ask you. I, too, have been back in the office, I guess, 4 weeks, starting kind of late summer and then more so lately. And it is good to be back among colleagues. It's just a different experience. And, the reason you go to work somewhere is because of the culture of a company. And you don't necessarily get that from home. Although I do wonder, and you and I have talked about this, what are you hearing from clients and customers and folks within the real estate space? What are your expectations? We constantly are having that conversation, Kent, about working from home and whether or not that really sticks with us longer term. Ask a different CEO and you get a different answer.
Yeah, well, I'll tell you, there are certain things from the COVID environment that are going to be with us, and there's some that won't. Masks and separation won't once we get through all the vaccinations and things, wherever that's May, maybe April, who knows. But there are some things that will stay. And I think working from an office will be a axiometric program. People will still work from the office. However, if you are flooded with emails and you want to stay home one day and work and get all these emails done and really focus, something that was not available pre-COVID will be available post-COVID, because I think people understand that you can be efficient from home. Not as efficient, not as opportunistic, not as creative, but there are certain pieces of business on certain days that do work. So I think that will be the place. But once people come back and they recognize the camaraderie and the efficiency and the opportunity and creativity that's there, and the collegiality, I mean, that is really a lot to do with businesses. People won't want to work from home as much. So I think that's really where we're going, and it's pretty evident that our productivity is not as good at home as it is in the office. The first 3 months of the pandemic, it was. People did pretty well, but it fell off rather quickly.
Yeah, well, and it's interesting too, because I wonder what are you seeing in terms of. I was talking with the head of BNP Paribas USA just last week, and talking about that he is hearing people reassessing their real estate needs, especially when it comes to some of the folks within the financial community. Are you seeing signs of that where people are saying, okay, we are though going to cut back on some of our real estate footprint?
Well, that has been a conversation for the past 30 years in New York City. From one thing to another, whatever the impact was or whatever the reason was, that we've been talking about that. So this is something obviously very unique, but I think the conversation isn't that fully unique. And what are we seeing? Yes, people are evaluating whether they're going to be in expanding or contracting. I know there's some companies that are expanding because they want to have a little more distance between their people, and they're not going to pack them as tightly as they used to. I have a friend who's a major business operation now, and a lot of creativity in his type of business, and he says he's tired of being in an office space. He wants me to go out and find him, either a large type mansion or a small building that has outdoor space, because he wants that kind of atmosphere, and he's tired of working in a conventional office, but still needs to have an office. So I think we're going to see what's going on over the next 6 months here, but I still have faith that office space will be a needed piece of business for the whole industry that we're working in. I'm not worried about that as much, but yes, there's going to be a shakeup, and it'll continue for the next 6-12 months for sure.
And what do you think with retail? What do you think is going to happen there? Because it's kind of depressing when I go home and I'm just amazed at the number of stores that have shut down.
It's sad and painful. But
restaurants,
again, right, that particularly. But again, pre-COVID, there was a massive change going on in retail,
right.
And I will say this: I've said before, retail is like what Sir Isaac Newton said about matter, right? It's neither created nor destroyed; it's merely changing its form. Retail is not being created or destroyed. People are buying retail, they're shopping, they're doing things, but they're doing it differently. So if you're going to buy food products, staples like paper products and Kleenex and other things, you don't need to go to the store and lug it around and take it home.
Right.
You can do it online. Okay, big box users are going to be less frequent, and not as much in demand right now. So what's going to happen? First of all, prices are declining in retail. There's no doubt about it, because we've been hit brutally hard. So when we get out of this COVID, there's going to be a game of musical chairs. Everybody will be going to different spaces. It may be different companies in different spaces. It may be same companies in different spaces, but the retail will come back, because people are here. People will be shopping. People will be eating and drinking and going about their business. But we will have a new level of payment, and then our quality of life will go.
Hang on for a second, because I got to take a little bit of do a little bit of news, but then hold that thought, Kent, and then we'll come back and talk more. I just didn't want to cut you off in the middle of a thought. Kent Swig is going to be with us, president of Swig Equities. We'll continue our conversation in just a moment.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. It is Monday. I'm Carol Masser in our Interactive Brokers studio at Bloomberg headquarters in New York City. We're going to continue our conversation with Kent Swig, president at Swig Equities, talking commercial real estate. What trends stick with us post-pandemic? What go away? So we'll get back to him in just a moment. Right now, though, let's get back to Charlie Pellet and check on the world of business. Hey, Charlie.
Thank you very much. And it was a mixed Monday. By the way, no earnings reports. Very unusual after the bell today. We've got the Dow, the S&P lower. NASDAQ is higher. Stocks falling for a fourth day as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. S&P 500 index capping its longest slide since September, now 1.5% below its December 8th record. S&P down 16 today, a drop there of 0.4%. The Dow down 184 points, down 0.6. NASDAQ up 62, up by 0.5%. 10-year yield 0.89%. Gold down $11 the ounce at $18.28, down 0.6%. And West Texas Intermediate crude up 0.9%, $47 even a barrel. So again, a down Monday here, mixed Monday. As for the overall interest rate outlook, Valerie Grant is Senior Vice President at Alliance Bernstein. She was interviewed this morning on Bloomberg Television and Radio.
If you look at rates, I think that people are expecting rates to be lower for longer. And what that means is that companies are facing a much lower cost of financing. I think we'll continue to see increased activity in mergers and acquisitions and also refinancing of debt, so companies will have strong balance sheets.
AstraZeneca shares slumped to an 8-month low after it agreed to buy Alexion Pharmaceuticals for $39 billion. Some investors questioning the strategic rationale for the UK pharma giant's biggest deal ever. Today, the ADRs of AstraZeneca down 7.8%, but the news sent Alexion surging by 29.2%. Oracle co-founder Larry Ellison says he's moving his primary residence to Hawaii, becoming the latest Silicon Valley executive to depart the state where they built their fortunes. On a down day for the rest of the market, Oracle up today by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie. Thank you so much. I want to get right back to Kent Swig, President at Swig Equity, still with us on the phone in New York City. So, Kent, what do you make of, there is a lot of movement. Elon Musk, Carl Icahn, Joe Rogan, a lot of folks who have left New York City in particular. And we have a story in the Bloomberg. It's all about people going to Texas and Florida. We're finding a lot of people going to other places. Sometimes it's because of tax reasons. Sometimes it's because of space. Are we potentially, though, going through, I know I'm going to hammer you a little bit more, a little bit of all of a sudden Americans are moving around and there's a migration away from especially those big cities or big states of California and New York?
Well, again, this was a trend in the mid late 80s that happened in New York City, where big companies like J.C. Penney moved out from here, and a lot of them found out that they were less efficient and less opportunistic and creative.
Less relevant, maybe even.
But today, we have to worry a little bit more. And the reason is because you've got technology that allows you to have much more interactivity with people wherever they are. So, yes, we are seeing some trends like that. Do I notice it? Absolutely. Am I overly worried? No. Am I concerned? Yes. But you look at like Amazon that is here and growing, and you take a look at Facebook, which took 1.5 million square feet in Hudson Yards, and they haven't even occupied it yet, and they took another 730,000 square feet at the Farley office building. So, the one thing that New York has, which is a plus and a minus, which is its density, and that breeds a lot of energy and a lot of creativity and a lot of opportunity, which the young people like. Then you have to overlay that with there is a cost of doing business here, and it is a more difficult place. And I think some of the companies have said that maybe we'll headquarter somewhere else. that doesn't always mean that they're going to take away their footprint in New York City. It just means for tax purposes, potentially, they may headquarters somewhere else, which is still not great for New York, but they're not abandoning New York and leaving and walking away. But it is something to notice, and I think we need in New York to recognize that and have a solid, good, pro-business environment, which does not mean a negative consumer environment. It just means that there has to be a blend between the consumer and the businesses that are here.
Hey, what do you make of, we read a story, and we're talking about, this is actually from the Wall Street Journal, Dow Jones, about Blackstone ramping up its bet on biotech, lab space, and other life sciences, real estate. I mean, what are the, when you look at kind of what's going on in this world, I mean, listen, you've got to be thinking about, making investments about the trends that you think are going to be significant in the real estate world, for the longer term. And I'm just curious, are there new trends or anything that you're picking up on result of the pandemic or other, maybe even pre-pandemic, that you think our investors in our audience need to be kind of paying attention to?
Absolutely, the trend for life sciences is very strong in New York City and growing, and that's one of the strong big areas here that's working. So that's a very positive thing, and I think you're going to see more and more life science growth in New York City. We've got the density is great for that, the population, and the support for that, and that is a very big piece of our growth here. So yes, and wonderfully so, and very positive.
Hey, listen, just got about a minute left here, unfortunately. We never have enough time. Talk to me about the Biden administration, your hopes and expectations for what Joe Biden and his team do in the new year and what you're hoping for 2021. Just got about a minute.
Okay. Well, the first thing is this. Regardless of whether somebody enjoys his policies and supports his policies or doesn't, the one thing that I'm very encouraged about is that the Biden administration will bring professionalism and graciousness and thought and soul back into our form of government, and I think that we have that lacking. So for me, I'm very pro and positive what's going on, but I think around the world, and especially with all the problems that's going on in America, we need to have real professionalism and real heart and honor and integrity back into government. And then the biggest challenge that we've got is you have over 70 million people that did not vote for him.
Right.
So that means you have to recognize that, and that doesn't mean you have to tell those people that they're not good. They're not. But you have to reach across and be able to energize them to say, America needs to be America, and then we can argue about how we want to be and how we want to implement ideas. But first and foremost, we're all Americans, and I think we've had too much of the separation of what's going on. Yeah. And I think hopefully under Biden it'll be more unified and certainly much more professional.
I'm thinking everybody's listening, and there's people in the cars, and they're just nodding their head like, yep, he's got it right. Ken Swig, thank you so much, President of Swig Equities. Happy New Year, and have a good and healthy holiday. All right, let's get back to world and national news. For that, it's over to Mark Mills in the Bloomberg Newsroom. Hi, Mark.
Hello, Carol. The first COVID-19 vaccine shots were administered by hospitals Monday, the initial step in a historic drive to immunize millions of people as coronavirus deaths passed the grim milestone of 300,000. New York is headed toward a second full shutdown if COVID-19 cases and hospitalizations continue at their current pace, according to Governor Andrew Cuomo.
If we do not change the trajectory, we could very well be headed to shutdown.
Cuomo shut down New York City's indoor dining on Monday. President Trump is backing off a plan to give White House staff early access to the COVID-19 vaccine. Bloomberg's Nathan Hager with the story in Washington.
In a tweet, the president says he's directed that people working in the White House receive the vaccine, quote, somewhat later, and he says he's personally not scheduled to get a shot. Sources tell Bloomberg News vaccinations will be offered to critical personnel in all three branches of government who are deemed essential, and they could start as soon as today. The shots will be staggered over the following 10 days to ensure staff don't experience possible side effects all at the same time. In Washington, I'm Nathan Hager, Bloomberg Radio.
Joe Biden is ready to declare that not even an abuse of power can stop a peaceful transition of power in the U.S. after last month's election. A swipe at President Donald Trump's refusal to accept defeat and at the top Republicans who've continued to stand by him. The president-elect is delivering a prime-time speech Monday after the Electoral College formally votes to declare him president. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark Mills, thank you so much. You are listening to Bloomberg Business Week. I'm Carol Masser in our Bloomberg Interactive Broker studio. Joining me is Charlie Pellet of Bloomberg News. And Charlie, I don't know, I'm a little late, and I just went out this weekend to get my Christmas trees after my sister called me and said, have you gotten your Christmas tree yet? Because she knows I'm always late. Because she said they're selling out. And I have to say, I went to the place I've been buying them for years, our little local flower shop. And they set up every Christmas outside. It's really sweet. And all they had were small trees left.
Well, come to Brooklyn. They're all over the place.
Are
Every
they?
street
I'm coming
corner.
to
No shortage in Brooklyn. Now, that said, you live in a suburban home. You might have a taller ceiling than many people have in Brooklyn. You might have a bigger place than many people have in Brooklyn. Maybe you want that bigger tree. You want a smaller tree. Lots of them all over the place. But get ready to pay. I'm curious, and you don't have to answer if you don't want. What is the Masser household price point for a Christmas tree? Because that's where this story's going.
There kind of is no price point because you have to have a Christmas tree, at least in our household. But I will say, listen, you got to do it because on the streets of Hong Kong, it's pretty expensive.
It is. I mean, we're talking almost $2,200 a piece in Hong Kong, $2,167. We're talking U.S. dollars, not Hong Kong dollars.
My husband would be like, yeah, let's just break a branch off the tree. That's what you would have to do.
I'm with hubby on that one.
But I'm hearing people say, I think part of it is a lot of people stuck at home. They're not traveling and they're not going somewhere where somebody else maybe has a tree. So everybody is going out, especially for those obviously who celebrate Christmas, are wanting a Christmas tree. And I also think people are doubling down and also put their Christmas trees up really early this year.
Exactly. And you know what? I've got to get to the real thrust of this story from the Wall Street Journal. The Christmas tree shortage has its roots in the global recession of more than a decade ago. There was a glut of Christmas trees that caused prices to tumble. So some farmers planted fewer or switched to other crops. Also, we've got wildfires on the West Coast that wiped out a number of Christmas tree farms.
It's breaking my heart. I got to get like an 8-9 foot tree. I'm just telling you, I'm going to be out. Maybe I'll come into Brooklyn. Charlie's going to have to take me tree shopping. All right, Charlie, thank you.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The S&P 500 index today capped its longest slide since September. It is now 1.5% below its December 8th record. Stocks down for a fourth day as investors assess the prospects for a federal spending package and the likelihood for further virus-related economic restrictions. Today, we saw the Dow, the S&P lower, NASDAQ higher, S&P down 15, a drop of 0.4%. Keep in mind that at one point during the trading day, we did have the S&P up by 34 points, up 0.9%. In the end, though, a loss of 0.4. The Dow down 184 points, a drop there of 0.6%. NASDAQ up 62, a gain of 0.5. 10-year yield 0.89%. Gold down 0.6%, 18.28 the ounce, lower by 11.85. West Texas Intermediate crude 46.98 a barrel, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, get your pen and pad ready because we got a great list of books we're going to hand your way. Just going to warn you. Earlier, we talked with the Carlyle Group's David Rubenstein about his new book. We talked about it. It's How to Lead, and it's all about leadership. Well, it is a great business book of the year. And when it came to actually putting together that list, as our Bloomberg Pursuits team did, what they ultimately found is that some of the best books this year, well, they weren't technically business books. Some weren't even published this year, which just makes this list even that more interesting. So here to tell us about it in the 12 days of gift giving is Bloomberg Pursuits Deputy Editor James Gaddy on the phone in New York City. So nice to be talking with you. So tell me how you guys go about putting together this list. You obviously reach out to folks that listen to Bloomberg or on Bloomberg, but tell me a little bit about the discussions that go on.
Hi, Carol. Great to be here.
Yeah, great to have you.
This project is truly a company-wide policy or project. We have the luxury, honestly, of having people all over the world who have contact and resources to talk to some of the top business leaders all over the world. And so we reach out to our reporters and bureaus in Europe and Asia, obviously here in New York. And they come back with a list. We had 52 this year, actually. And as you mentioned, not a lot of them were business books as you normally think about it, or even from this year. You know, one of the books that came up was The Great Influenza from way back, Ancient History, 2004, written by John Barry, but of course very relevant today.
Yeah.
History of 1918 pandemic.
I have to say I bought that book this year. And partly I think it came up on a Bill Gates list of like the 5 books you have to read, and that was one of them too.
Yeah.
So, and several people, Axel Heifer, he's been a guest on our show, the managing director over at Trivago, that came up on his list.
Yeah. You know, one of the interesting things was that common thread that kind of ran through these selections were people trying to find historical analogies to this, various crises going on today. And, you had people like Jonathan Gray, President and Chief Operating Officer of Blackstone Group, and looking to the 1940 Blitz, the splendid and the vile, which, he described as, looking at Winston Churchill and how he retained this relentless optimism in the face of such insurmountable odds. He called it a powerful lesson for today's challenges. So that was interesting. We had Roger Ferguson, also president and CEO of TIAA, who looked to a biography of James A. Baker III called The Man Who Ran Washington. And, he said it's not a time period, not too long ago, but, you can still see these sort of hyper-partisan politics, the seeds of those things being planted during this period. You had, let's see.
It's interesting, right, to see where leaders go, right? I mean, at times of crisis. Like, it's not just like, okay, let me get the Leadership 101 book, especially in a year, right, James, where people said, wait a minute, there is no playbook on this. So it is fascinating to see where they went.
Yeah. We reached out to Larry Gagosian, the gallerist, art gallerist, and he went back and looked at Hollywood and a history of this year that came out called A Big Goodbye. And called Chinatown in the last years of Hollywood. And he said, people who work in the business of art like he does, Robert Evans, producer of that movie, he found new meaning in this quote that he had, which was always to just bet on talent. And so you have people going back to these time periods, which, and then one other example was Sam Cobb, CEO of Tipping Point Community. He went to a piece of historical fiction called The Cold Millions by Jeff Walters, which was a very popular book this year. And it goes and looks at the early 20th century, a little-known free speech battle between union organizers and leaders in Washington state. So yeah, they're kind of, the time periods were very different. The protagonists in these books are very, very different. And it just kind of shows how people are looking for what we found was, these analogous moments.
I love someone like Danielle Boulou. I mean, this has been just a devastating year for anyone in the restaurant industry. And the book that he's reading, Dirt, Adventures in Lyon as a chef in training, father and sleuth looking for the secret of French cooking. But it's just funny to see where, people go.
Yeah.
Right?
That was a really interesting one. He said, it took real guts for Bill Buford to go in there and do that. And he knows from firsthand experience.
Yeah, exactly. I bet, right?
Yeah. We did have a few, typical sort of business books, which, we should call out because, in the year that everyone binge watched Netflix, Mark Randolph, one of the founders of Netflix, wrote a book called That Will Never Work. The birth of Netflix and the amazing life of an idea. Well, whoever said that was obviously wrong.
But it is fascinating, right? It's so funny because we had on David Rubenstein earlier of the Carlyle Group, who's got a book out, and he was talking about leadership and talking with Jeff Bezos of Amazon. And I guess early on he had an opportunity to do a 20% investment in Amazon, and was like, yeah, no, thanks. It's all these unbelievable ideas, whether it's Amazon or Netflix, that are just dominating our world. So it is interesting to see where people involved in that, what they're reading. What is there one book in particular, or there's anything that surprised you or that really stood out for you? I mean, you've talked to some of the major themes, but I'm just curious if there's anything that, I think it's interesting, John Foley reading about Bob Iger.
Mm-hmm. Yeah, that book is called The Ride of a Lifetime, so you kind of see where that one's coming from.
It's on my bookshelf,
from
too.
The CEO of Peloton.
Yeah, exactly. Anything that surprised you? I mean, it's really a great list. I think, God, these are just books that would be great if you could, you take on vacation. There's just a nice kind of smattering of some different things.
Yeah, I guess one thing that kind of, shouldn't surprise me. I guess the fact that it does is shows says more about me, I guess. But there were a lot of female empowerment books that came up that were really interesting. Untamed, Glennon Doyle's memoir, was also a bestseller this year. Was mentioned by, I believe, 4 different people. And one of our people, Mary Mack from Wells Fargo, called it an authentic and empowering kick in the tail. So that should just be blurbed on the cover.
Yeah, that exactly right. Here's why you want to do it. Really, it's really nice. And then there's a few books I thought about nature too. I think one about trees and and I feel like we got a really big wake-up call too when it came to climate change, right? This year, you could see how that was influencing some people's choices.
Yeah, it's Christoph Meyers, CEO of Mandarin Oriental Hotel. Mm-hmm. He also chose David Attenborough's latest book, A Life on Our Planet. And, he just calls it a poignant reflection on an extraordinary life.
Yeah, exactly.
And, that sort of inspiration, if you think about the memoirs that were mentioned, like Untamed, books like this, A Life on Our Planet, people, are looking for historical analogies, but they're also looking for inspiration. They're looking to feel good and try to build hope for the future.
Totally. I agree with you. It's an incredible list, so well done. Jim Gaddy, he is deputy editor at Bloomberg Pursuits, joining us on the phone from New York City. You can find the best books of 2021. It's in Bloomberg Pursuits. You can find it on the Bloomberg and also online at Bloomberg.com. You're listening to Bloomberg Radio.